Good morning, everybody. Welcome to another lesson. Today's lesson is on published company account. The areas that we are supposed to cover in published company account, we have introduction, types of account, preparation, and presentation. We start with the introduction. What is published company account? The type of account which is prepared and presented to the public to make use of it. So we are publishing the transactions. The published company account can be prepared and presented in schedule form. The account published can either be audited or unaudited. So published company account must be audited, but sometimes it can be presented as unaudited. The published company account must be presented to the Registrar of Companies for filing purposes and conforming to Companies Act. The following are the information which must be published while preparing and presenting the published company account. Number one, they include profit and loss account. 2, statement of change in equity. 3, statement of financial position. 4, cash flow statement. 5, director's report. 6, auditor's report. So these are the statements which must be represented in the published company account. Types of account. They include the following: profit and loss account, statement of change in equity, statement of financial position, and finally the cash flow statement. So we are starting with the profit and loss account. The account is prepared to show the performance of the company over a given period of time. It represents schedule 1 to 7, the profit and loss account for the year ended date month. So we are giving the format for the profit and loss account. So sales stock turnover, we have schedule 1, net profit before tax, schedule 2, corporate tax, schedule 3, which you less from net profit before tax. What you get is net profit after tax. Extraordinary items, which is schedule 4, you either add or subtract. This is based on foreign exchange effect. Transfer of reserves, this amount of profit which has been transferred to the reserve account, which you less. Dividends, which you less, which is schedule 5. Retained earnings of the previous year. When you add, you get the retained earnings of the current year, which is schedule 6. Then earning per share, which is schedule 7. How do you get the earning per share? You say earning per share equals to net profit after tax. You divide by number of shares. Format of the balance sheet. So the account is prepared to show the financial position of the company over a given period of time. The account is prepared in schedule form from schedule 8 to 18. The account established: 1, stability of the company. 2, the solvency of the company. 3, the liquidity of the company. So these are the information that you can learn from the financial position. So we have the format of the balance sheet in the schedule form. Capital account, schedule 8. General reserve, schedule 9. Retained earnings, schedule 10. You find the total, which is called equity capital. Debt capital, which you can have debenture, schedule 11. When you total equity capital and debt capital, you get capital employed, represented by non-current assets cost, fixed asset, schedule 12, intangible asset, schedule 13, investment, schedule 14. Total fixed asset, you get the amount. Current asset, we have stock, schedule 15, debtors, schedule 16, bank and cash, schedule has no schedule. Total current asset. Current liabilities, we have creditors, schedule 17, bills payable has no schedule, unpaid corporate tax, schedule 18, unpaid dividends has no schedule. Total current asset, you have the amount. Now you see total current asset minus total current liabilities, you get the net current asset. Total fixed asset plus net current asset gives us capital employed. So that's actually the format. Now the problem. The following is the trial balance of Justice Company 31st March 2009. We have the share capital, we have premises, 12% debentures, plan, profit and loss account, stock, bills payable, debtors and creditors, goodwill, purchase and sales, cash and bank, general reserve, call in arrears, bad debts, provision, interim dividends, preliminary expenses, wages, general expenses, salaries, bad debts, debenture interest paid. Now this is the question. Additional information. Depreciation is 15%. Write-off 5,000 for preliminary expense. Half year debenture interest due. Create 5% provision on debtors. There was no disposal of asset. Stock at 1st March 2009 is 950. A claim of 25% by workmen's compensation. The corporate tax is 30%. Now we have the solution. So you need to prepare the trading profit and loss account. Now the aim of preparing trading profit and loss account is actually to get the net profit before tax. So this is our trading profit and loss account. I'm just running through it. This is how you do it. Now we get 360,000. Now our aim is to get this amount, 360,000. So prepare trading profit and loss account or income statement, you get this amount. Now we start with the first schedule. Justice Company profit and loss account for the year ended. Number 1 is sales, is 4,150,000. Net profit before tax is 360,000. Corporate tax, you less 108. You get net profit after tax 252,000. Extraordinary items, there is no extra. Transfer of reserves, we have 10,000 as per the question. Dividends 5, schedule 5, 392. Retained earnings 150, which is a loss. You add retained earnings for the previous year 262,500. We have retained earnings which is 112,000. Now our earning per share is 6.3. You say the net profit after tax divided by the number of shares, you get the amount. Now this is the statement of change in equity for the year ended. Debt, capital, reserve, retained earnings, total equity capital. So on 1st April, balance brought down was 4,250,000 for reserve, 262.5k for retained earnings, totaling to 4.512 million. Next item is issue of shares, which was not there. Net profit, we take it from net profit before tax, which is 252k. Dividends is 392, you less, you have the amount. Transfer 10,000, 10,000 less. You have at the end of the financial period, we have total capital, which is 4,250 plus 10, which is 260,000. We have retained earnings 262 plus 252 minus 392.5 minus 10, you get 112k. Now you total this amount, 4 million plus 260,000 plus 112k, you get 4.372 million. Now that gives us this changes or statement of changes in equity. Now we come to the balance sheet. Justice Company balance sheet. Capital is 4 million. General reserve is 9, schedule 9, 260,000. Retained earnings 10, 112,000. Equity capital 4,372,000. Now something you need to know. This amount that we are getting here is the same as what we got in the statement of changes in equity. Then debt, we have 12% debenture, 3 million. So our capital employed will be 7,372,000. 257,000, represented by, we have fixed asset. You total all the fixed asset, this is what we are getting, unless the depreciation, 5,877,000, intangible asset, goodwill, which is 250,000, investment, which according to our question it's not there, so total fixed asset gives us 6,127,000. Current assets, we have stock, schedule 15, debtors, schedule 16, branch and cash, which has no schedule, preliminary expenses has no schedule, income in arrears 75,000. When you total, you get total current asset 2,303,000. Current liabilities, we have creditors, schedule 17, 400,000. Bills payable has no schedule. Unpaid corporate tax, which is 8, schedule 18, which is 108. Interest 180. When you total this, you get total current liabilities, which is 105, 58,000. Net current asset, total current asset minus total current liabilities gives us 1,245,000. Now capital employed. Our capital employed is 7,372,000. Compare. Capital employed from liability side is 7,372,000. In asset side, 7,372,000. So our balance sheet is balancing. Thank you so much for your understandability. See you then.